Yesterday I said today was going to be technical Monday with a bias of down. So last night the futures were down, so I expected a gap down, and it gapped it down almost to the 4400. Actually, right here, the 4400 on the S&P 500, and then went down a little bit more. I targeted the 5 minute moving average trend line for support to buy. Unfortunately, it didn't get there, right? I should have selected, I saw this, right? When it went down to the 5. Now, sometimes the QQQ will react more than the SPY because it's the movement is more volatile, right? Especially if they're hitting the QQQ. So on a correction, they're hitting the triple Qs, and that's why it undershoots the 5 minute trend line, and that's where it gains support. At this point right here, tamming. I was tamming right to hit that, and that was a bad decision. Obviously, I missed out of this on the long side, and on top of that, I did not cover. Actually, I was expecting to buy. I did not buy the second leg of the call option that I sold. I sold call option on Friday, and so that was quite profitable. I was going to take the puts or sell the puts so I can carry a straddle. That did not happen, and eventually I did cover. I knew it was over, and I knew it was over right at 11 o'clock actually because of the economic data. So silly me, silly me. So this 1 year consumer expectation, right? What I was thinking was I was basing the results on um, last week, and that would be right here, right? I was basing the results on this. What I had forgotten, um, this Michigan 1 year inflation was higher than forecast. This data is relatively old, even though it came out on Friday. The forecast was relatively old. Um, so the actual came out higher than the forecast. However, what was released on Friday this week was the CPI and PPI. So the CPI for this week, and also this economic data, this is November actually, and this is probably November as well, I believe. No, it's just a 1 year. So this wasn't like a specific month, right? It's just a 1 year consumer inflation expectation. The data came in lower, so this is a very positive sentiment. So when that hit, I had forecasted higher, right? So I had forecasted what I was thinking was going to happen was a gap down, um, a hit up, and right at 1100 was when it would shoot down and hit this 5 minute, or potentially even hit the 15-minute trend line, this guy right here. My mistake was that this this number that came in 1100 was under forecast, or the results was less than the expectation. So that's a positive. So at that point, I had to cover my call option, and I didn't have any put options, right? So yeah, very disappointed. So I lost out on the potential of having those puts and having those longs. It had it hit the signal. So opportunity loss to me are considered real loss in the sense that how would have banked it. So it's a lesson learned, right? A lot of time the QQQ would be the signal because it is stronger than most of the time it will be the SPY, especially when they run in tandem. If they run in tandem or relatively lockstep, even if the percentage are different, typically the percentage will be different on the Nasdaq and the S&P 500 because the Nasdaq move in a larger percentage. than the S&P. However, the movement itself, the relatively movement itself, will be in lockstep. In this case, you can see that the QQQ was moving a lot stronger than the SPY. So that is why the reaction or the buy signal was triggered technically on the QQQ rather than the SPY. So waiting for it to hit that was a mistake. Also, it did it right at 55, which is a perfect time to buy, and because it was transitioning to the next hour, and so I missed out on all of that. Unfortunately, I did make decent money on the short side. Somewhere along the line here, I did a short and made some money, but overall disappointed in my execution, right? So the day was relatively flat. This is as flat as you're gonna get as far as a technical Monday. You can see it did continue to react off the QQQ. So on top of um, the V signature, or the V theme that has been going on recently, right? You can see, like I was mentioning, that there has been a V recovery, small V here, small V here, small V here. So that V is continuing to show. On top of that, now the QQQ is reacting more strongly than the S&P 500. So paying attention to the QQQ technical is a good thing, right? So here you can see reaction off of the 5 minutes, reaction off of the 5 minute. Right here, reaction of the 5 minute and the VWAP, and right here is the 5 minute converging with VWAP right on the close. So technically, it's at a point of parity, or whatever you call it, a neutral point, right? Because it's right at the volume weighted average. Tomorrow, obviously, no, I did not. I decided not to buy ahead of the number or go long ahead of the number, because what I'm thinking is that this number that came out and was published on Friday, that run up, right, on Friday from this point to this point, all the way from here to here, or you can look at the SPY, like this point, from here to here is the result of the CPI. Okay, it's already baked in because investors are taking the expected number and insert it into the price movement. So we already have a good, decent, how much is that? Almost a decent, 8 points of movements for the CPI. So normally on the day of the CPI, it doesn't move 8 points. Okay. So I'm thinking that 8 point is already baked in on this guy being at about 4.1. So what if it's 4.2? Well, that is still decent enough. Like if this is 4.2 on the core, year over year, and month over month, this is probably 0.3. This and the actual, where's the actual CPI at? Right here, year over year actual CPI. If this comes in at 3.4, it's gonna be relatively flat in my opinion. But eventually, I do think it's gonna fail because I don't think that number is good enough, right? It is good, but I don't think it's going to be good enough for investors to really treat it as a good, as a breakout point. So at this point, I'm really thinking it's going to be a Tuesday. Flat Tuesday, because I don't think this number is going to, it's not going to be below 3.3. I don't think so. It's not going to be below, it's not going to be like 3.2. This is not going to be 4.0. I don't even think it'll be 3.3 or 4.1. I think it'll be 4.2 and 3.4, right? Which is a very good number on the CPI, but it's not good enough to break out. So it's going to be a flat Tuesday. Then reversal Wednesday is going to be down. And then you might have that breakout on Thursday and Friday because, well, let's see if Thursday and Friday data matches up on anything. The PPI is Wednesday, and then Thursday you do have the jobless claim. So the jobless initial data for the jobless came, the forecast data has come out. So this is going to be actually it's higher than last week, which is surprising because I was thinking when is the seasonality for Black Friday and Christmas going to hit in so that the jobless claims are going to be lower due to the holiday seasons. Well, it may not be the case because this is a lot higher than expectation. So if this comes in higher, which it may, um, and then the week after this week, which would be next week, I think that is when the number will start going lower due to the seasonality hiring or the holiday hiring, right? Um, so Thursday would be an up day, and then of course Friday should be a down day because you can see the housing starts, the housing permits are lower than the previous month, and most likely it's going to be lower um, on the actual than the forecast. So I would say this week looks like it's going to be relatively flat to down, and if it's down, then it's gonna retest or re-enter into being below the monthly 5-month moving average. And so that's a critical point, and that's why there's a lot of channels out talking about this trend line that we see, and it doesn't show up very well on the monthly, but on the weekly you can see it clearly. um, and you can look at here and you can see like this is this line they're talking about. This guy says it's negative. This guy 60% chance of this happening this week. I'm not sure if he's negative or positive. Um, so everybody's looking at that trend line, honestly, right? Before I wouldn't ever see this trend line because I was my analy my I guess my analysis was relatively poor, right? Because I was just doing it without actually recording it and revisiting my analysis, recapping what is the this guy, what is he saying? Oh, that's 11 days ago. So my analysis was relatively poor in the past, but it has gotten a lot better now, using this forward-looking analysis that I'm referring to, and it's matching up to a lot of what these guys are saying to some degree, right? So let's say go back to the consumer expectation, the housing starts should be lower, but this isn't actually a bad number. Looks like it, and then housing permit. So yeah, I'm not sure if Friday's gonna be down as well, but I would think it's down only because I think Friday they want to get this MACD toward this MACD. They still want to get it to parity, and the reason why they want to get to parity, which is zero, is because they want December to be a red December, for the shorts at least, right? The shorts want it to be a red December, which would mean that this guy goes below the 5 month, and then the 5 months starts to go down. Um, the trend starts to go down for December, January, right? So January going to the 400. And in hindsight, when we're in January, when the economic data comes out and it's a lot worse than we expected, or every channel will be start talking about the economic data and the layoffs and the poor, GDP numbers, and I don't know, any political things that might show up. All of that are self-fulfilling. All of that are after the fact analysis, right? Once that comes up, and December is down here because it failed this 5 month moving average. Every channel is going to talk about how bad the fundamental is. Fundamental didn't matter when it was going up, but all of a sudden, when it goes down, it matters. And that's what I'm talking about, right? There's three components: fundamentals, technical analysis, and forward looking analysis. Forward looking analysis is what I'm doing right here, what I'm stating in January when this thing goes down and tests this 50-month moving average, and it may not be January, it may be February when that tested, but the point is I'm still right now expecting this to fail. And I know I said it was going to break out, but I just don't, I'm just not believing. I am a bull, I mean, a bear by nature. So it's hard for me to think that these numbers are going to be so good on the CPI and the PPI that it's going to break out. That's just, I mean, it's against my nature, unfortunately, but it can happen, right? Well, but my analysis, because fundamentally I am a bear, I do want to see this fail. I do want to see for the month of November to go back toward this trend line, or this Fibonacci number, so that the MACD will be parity, and then December will be down, February will be down, so it will follow a downward trend and go toward this level and eventually meet up with this 50-month moving average. So that is what I am seeing. I don't think there's anything else that I need to talk about. There's nothing coming up. I don't. Let me just look at next week just to see if I'm not missing anything crazy. 5 month, the 5 year inflation. So this Michigan inflation data always come out higher than expected for whatever reason. The consumer sentiment, these might be lower than, these are the numbers that just came out. So that's next week. Yeah, so that's where we at right now.